Good day, Junior Techies. I'm Mrs. Brimacombe. We are now going to look at November 2019, Accounting Paper 1. Question number 3. This question focuses on partnerships, on the notes to the balance sheet and the balance sheet. Remember that another word that we use for balance sheet is statement of financial position. Make sure that you understand the different terminology which is used. If we talk about income statement, we talk about the statement of comprehensive income. This question is 38 marks and 30 minutes is allocated to this question. Please make sure that you stick to the times prescribed per question. You don't want to end up not finishing your paper because you took too long. I'm going to remind you of this every single time. Now, when we start this question, we're going to look at the question paper and the answer booklet. Familiarize yourself and look carefully what is expected of you. SAPA traders, the information provided below relates to SAPA traders. The business is owned by S. Sol and S. Paul. The financial period ends on 28 February 2019 and the business applies a markup of 60% on cost. It is important to understand when your accounting period ends and when does it start. So if it ends 28 February 2019, it means it starts the 1st of March 2018. Required, complete the balance sheet, indicate the workings. Make sure that you show your calculations to earn part marks. If your final answer is correct, you get full marks, but if there's a mistake, then you lose all those marks. So make sure that you show your calculations. And then we need to complete the current account note. They provided you with an extract from the trial balance of SAPA traders on 28 February 2019. And then they've given you adjustments and additional information. So when you start, when you've got reading time, go through these adjustments. Look at the answer booklet and look at the figures which is given to you. Please, a reminder, do not change the figures on the answer booklet. I have made some slight changes to the original paper. So pay attention now to the following. When we start this question, we look at the balance sheet account section. Why? You should know by now that everything in the balance sheet account section will go to the balance sheet. Anything in the nominal account section will go to the income statement or statement of comprehensive income. So they've provided us with capital, drawings, current account, land and buildings, trading stock, bank, creditors control. Long-term loan is a question mark. Fixed deposit, AB Bank. So when it says long-term loan, it's a question mark. You should know that that will end up being your balancing figure. You need to find that figure. So how do I start this now? How do I approach this? We start by filling in capital, the amounts in brackets, because we do not know if there's an adjustment yet. You should know that your owner's equity consists out of capital plus current account when we're talking about partnerships. I'm not going to use the land and buildings because the land and buildings, they've provided the total fixed assets to us. The figure is there, so we're not going to change that figure. If you look at trading stock, I'm going to put that one on ice for now because we're going to do a T account. There were adjustments relating to the trading stock. So we're going to look at it a little bit later on. If you look at bank does have a debit balance. If it has a debit balance, it means it's a favorable bank balance and will form part of your cash and cash equivalents. Creditors control forms part of trade and other payables, and they've already provided the figure to you. So again, we're not changing that figure. If you, in an exam, see that there's a different amount that is written in there, do not change the figure on the answer booklet. Long-term loan, as mentioned before, is a question mark, so that becomes the balancing figure. And then fixed deposit, AB Bank, in brackets, 77,000. In question 3.2, they provided the retained income at the end of the year. You should know that if I add that together, the total will appear on the face of your balance sheet. So I'm going to write in brackets the two figures and I'm going to add it together. Adjustment number A. Partner sold two goods with a selling price of 1,920 for personal use before the physical count of goods. This transaction has not yet been recorded. This means that we will need to look at drawings and our trading stock. But because this is a partnership, you need to take note specifically which partner. Now, we never show that a partner has taken it at the selling price value. This is why they provided you as well the markup percentage. We need to calculate the cost. To calculate the cost, we're going to take the selling price times 100 divided by 160, and that equals the cost. So if I look at drawings will have an impact on your owner's equity. It's always on the plus on the debit, minus on the credit. So the balance brought down is 80,120. Because the owner has taken trading stock, we will now debit drawings with 1,200. So if we break this down on what is happening, trading stock has a balance from the trial balance 40,500. Adjustment number A, the partner took trading stock for personal use, so drawings 1,200. Adjustment number B, trading stock was sold to Phil Yoon on 27th February 2019 for 1,080. The cost amounted to 940. All the necessary documentation was completed and recorded. The goods had not been collected by Phil Yoon. So all of the transactions, all of the entries has been recorded. So we're not going to show it again. The only problem now is the stock is still lying there. So which means if we look now at adjustment number C, stock on hand, trading stock, 39,900. When they do a physical stock count, because the stock is still lying there, they would have counted that now as part of the stock. But we've actually sold those goods. The customer has just not collected it yet. So what needs to happen now? So this is what you need to be careful of. What we physically counted, that trading stock, that is our final balance, which should appear in our balance sheet. But now, because the stock is still lying there, and it has not yet been taken by the customer, but we've sold that, we have counted that now as part of our physical stock count. This is why we need to now minus 940, because that stock was sold. The customer just needs to collect it. So be careful with the trading stock. Stationery, 101 was left over. Whatever is left over will be subtracted from our expense account stationery, and it will be added to consumables on hand. Consumables on hand forms part of inventories. This is why we need to plus 101. Now we can calculate the total for inventory by taking the physical stock count balance, 39,900 minus 940 plus 101. Adjustment number D, an invoice was received from H&H Motors for the repairs of the vehicles 670. This amount has not been paid, so it's still outstanding. Repairs to a vehicle, do not add it to your fixed assets. And again, they've provided that figure to you. Because this is still outstanding, we are going to add it to our trade and other payables. Adjustment number E. Part of the building has been rented out since the 1st of May 2018. The rent for March 2019 has already been received and recorded. So now a common mistake. We assume that we need to now, 1 month in advance, divide the total from the nominal account section, the rent income, by 13. That would be a mistake. It was rented out from the 1st of May 2018. So from the 1st of May 2018 until March 2019 is equivalent to 11 months, and 1 month must be taken out. So we need to take 15,400 divided by 11 to find the monthly amount, and that will be taken out from your rent income, but added to income received in advance, which is regarded as a current liability, so it forms part of your trade and other payables. Adjustment number F. The fixed deposit amounting to 5,000 will mature in 4 months. That's within the next 12 months. And whatever matures in the next 12 months must be taken out of your non-current assets and shown as cash and cash equivalents. So this is why we're going to minus 5,000 from the fixed deposit under non-current assets, and we're going to show it as part of our cash and cash equivalents. Now we've looked at all the adjustments related to completing question 3.1. Now we can find the missing amounts. If we look at fixed deposit, 77,000 minus 5,000 equals 72,000. Once we've calculated the total for fixed asset, for the fixed deposit, the fixed asset figure were given to you. So if we add the two together, that equals my non-current asset. So again, fixed deposit, we're going to minus 5,000 from the 77,000 equals plus the fixed asset equals the non-current asset. If we look at what else can we solve, cash and cash equivalents, the total is 27,210. We've got inventories, trade and other receivables were given to you, and once we've calculated the cash and cash equivalents, we can now calculate the total current assets. Non-current assets plus current assets equals total assets. Now you should know, total assets must be equal to your total equity and liabilities. If I look now at my equity and liability section, trade and other payables, if we close that bracket, the total for trade and other payables is 27,561. That equals your current liabilities. There were no other entries involved there. If you take your total equity and liability minus your current liabilities, I've still got non-current liabilities and owner's equity that I need to solve. So what next? If I look at capital, we can total that. The total capital is 396,000 plus current account equals owner's equity. Now the balancing figure becomes the long-term loan. If you take the total equity and liability minus current liabilities minus owner's equity, that equals my non-current liabilities, which is equal to my long-term loan, 60,000. Question 3.2, completing the current account. So we start with the figures from the balance sheet section. Drawings is always closed off to the current account. Current account, Sol and Paul, these are my balances in the beginning because we haven't added the net profit. We haven't distributed the profit, the primary distributions of profits yet. We haven't calculated the final distributions of profits. So this is why these are my balances in the beginning. And both had a credit balance. Credit balance means positive balance. So to find now the retained income for the year, I can calculate this. If the end balances were given and the balances in the beginning were given, we need to do now opposite calculation. So opposite, we are going to minus in order to get the retained income for the year. Please understand this part at the bottom. It's so important, and especially if there were a debit balance. I went from a positive to increasing that amount to 53,511. This is why we need to subtract it. If we look now at the adjustment sharing of profits, the partners are entitled to interest on capital at 15% per year. If we look at the balance sheet section and we go through all the adjustments that we've done, you would recall there were no adjustment with regards to capital that said that the owner increased or decreased their capital. So it remained exactly the same throughout the year. So starting with Sol, we're going to take 216,000 times 15%, and for Paul, we're going to take 180,000 times 15%, and that equals the interest on capital for each partner. Each partner is entitled to a salary of 7,800 per month. Be very careful. This is their salary allowance per annum. So whenever they provide you per month, you should know that the salary per month must be times by 12 to find out the salary allowance per annum. And each partner will then get 93,600. Partner Sol received a bonus of 4,000. Paul didn't receive any, so we're just going to put a dash. Once we've got the primary distributions of profits, we've shown the salary, the interest, and bonus, we can calculate the total primary distribution by taking the salary plus interest plus bonus. And for Paul, he only received the salary and the interest on capital. The remaining profit or loss must be shared equally between the partners. Please do not take the net profit and divide that by 2 and put it as the net profit according to the income statement. That is a common mistake. Also, you cannot take the net profit and divide it by 2 and put it as part of the final distribution of profit. You should know that the net profit for the year minus the primary distributions of profits equals the remaining, which is 1,260. That will be shared equally between the two partners. Once we've calculated the final, this must now be added to the primary so that we can get the net profit according to the income statement. If you add those two together, it should equal the total net profit for the year. If it doesn't, it means you made a mistake. So now it becomes clear. This is why we fill in the information which we've got and we calculate as we go along. It now becomes clear that drawings becomes the balancing figure. Net profit according to the income statement minus drawings will equal the retained income for the year. So now we just do the opposite, or we find the difference between the profit per income statement and the retained income for the year, and that equals the drawings. Now, if you take the drawings 81,320 and you minus that from 80,120, you would notice the difference is 1,200, and that is the trading stock which the owner took, Sol, which he took for personal use, which was not yet recorded. If I look at Paul, we're going to take the difference, the net profit according to income statement minus the retained income. That equals the drawings for the year. Take note with this question. Financial indicators were not given to find missing figures, but that is also a possibility, a way in which they can ask it, where they provide you with financial indicators and you need to find the figures. So when you're studying your financial indicators, please do not just rely on a formula sheet and I don't need to study it because it's given to me. If you're going to do that, you're going to find this difficult. When you are given financial indicators and you need to find amounts, and when you look at commenting, which is question number 4, then you're going to find it difficult to comment if you don't know which financial indicators is used where. So study the financial indicators. Know exactly if we're talking about return on owner's equity, average owner's equity, gross profit on sales, etc. How do I calculate it? Because what if they provided me with the percentage? Example, the return on average owner's equity. They can provide me with the percentage and they can provide me with the partner's equity, which means I can calculate the net profit or loss for the year, which will appear in your income statement. Or they provide you with the net profit, they provide you with the percentage, and you need to work out your partner's equity. So this is just an example, especially if we look at the current ratio, assets ratio, stock turnover rate, stock holding period, all of that. I can give you those, or those figures can be given to you, those financial indicators. And you need to find the figures. Example, the bank figure, the debtors control, the trade and other payables. So make sure that you study it. I'm going to show you now an example. So I've adapted this a little bit and changed some of the figures. After taking the above adjustments into account, the following financial indicators were calculated on 28 February 2018. So they provide you with the current ratio and the debt equity ratio. So let's pretend now we've done all the adjustments. That's why we've got in brackets the calculations. So to solve the balance sheet now, or the statement of financial position, how do we approach this now? Trade and other payables we've calculated is 35,000. That equals your current liabilities. So if I've got the current liabilities and they provided the current ratio, you should know that your current assets divided by your current liabilities equals 2,5 to 1. This means that I've got now the current liabilities. If I want to find out the current assets, we're going to take 35,000 times 2,5. And that equals my current assets. If I look at inventories, the total can be calculated. Now, trade and other receivables becomes the balancing figure. This is now typically like solving a puzzle. So let's see if we can find the next piece. Capital, we've got 216,000 plus 180,000. So if we add that together, it equals my total capital. Capital plus current account equals my owner's equity. So now I've got my owner's equity, and the debt equity ratio is given to us. To calculate the debt equity ratio, we have to take our non-current liabilities divided by the partner's equity. So non-current liabilities becomes now X. My owner's equity, my partner's equity is 500,000 and the ratio figure was given 0,12 to 1. So to find X, we're going to say 0,12 times 500,000. So X equals 60,000. My long-term loan is then equal to 60,000. This means that we can now solve the total equity and liabilities. To solve the total equity and liabilities, we're going to take owner's equity plus non-current liabilities plus current liabilities equals my total equity and liabilities. Total equity and liabilities should equal your total assets. Now we're working up. We're going to work backwards basically. We've got current assets, so now I can solve non-current assets. Total assets minus current assets equals non-current assets. Now the fixed assets becomes the balancing figure. So this is just an example to show you how financial indicators can be used to find figures and essentially solving the balance sheet or completing the balance sheet. You could have just as easily been given the current assets and then you need to find the current liabilities. So if you want to find the current liabilities, we're going to take the current assets divided by 2,5. Make sure that you practice as many past exam papers as possible, especially on these topics. Thank you very much. Next, we're going to look at question 4. And question 4 will focus on the financial indicators and commenting on that. Have a wonderful day.